And today we'll explain a short nifty feature of the spot foreign exchange market, which is the fact that it closes every day for 5 minutes at the end of trading day in New York. And of course, closing means not really closing, but basically the spread's widening a lot. And what I'd like to do today is explain why that happens and why basically pretending that's basically it's a structural feature of the spot foreign exchange markets. I'll explain why. So today we'll explain the concept of interest rate parity very shortly. I'm sure you've learned about this at a business school or just Wikipedia. It's a must if you're a trader. Again, very briefly outline what drives the say any pair, the euro dollar rate at which the both currencies trade or any other pairs, and also just outline a liquidity provider's standpoint when it comes to what happens at those 5 minutes. Which is why they close the market. So let's get going. Interest rate parity and the exchange rate. So the interest rate parity is the theory that ties together the exchange rate between any two currencies and the interest rate that they and basically the price at which they both quote. The parity connects interest, spot exchange, and foreign exchange rates in the sense that obviously you can hold your monies, say, in euros for the next 3 months, and that's going to pay you a certain interest rate as determined by the central bank. Or you could also choose to exchange those euros for dollars today at today's exchange rate, reinvest in the US dollar exchange rate, and then make some dollars at the end of that. And obviously, there has to be a balancing act between both currencies in those 3 months so that you cannot make a risk-free profit by arbitraging across any mismatches in the exchange or interest rates between both. So a long way to say that interest rate differentials are one important part of what drives the price, the spot price at which two currencies quote at any point in time. So again, something plain silly, but just to explain what it means to buy or sell the euro dollar. Obviously, if you long the euro dollar, you're basically willing to bet your money to borrow some euros with which you then purchase some US dollars on trade open, and you hope by when you close that trade that the US dollar has appreciated against the euro. So you sell your US dollar holdings, you pay back whoever lent you the euro, and you have some money left because that's what you were betting. That's how it goes. Well, conversely, if you go short, the opposite applies. Now, importantly, when you're doing that, you should know that currencies have will carry interest over time, over different periods. In the case that applies to us today, it's overnight. If you borrow those euros overnight, then you will have to pay your counterparty the overnight rate for borrowing euros at that day, and then of course you will have purchased those US dollars. So in exchange for that, you will get whatever interest the US dollar pays, and vice versa in both cases. So the important thing to see is that depending on the size of each of the two rates, the relative size, you may actually make some money, all other things equal, or pay some money for interest on the basis of these funding rates, which is said guesswork at 5 p.m. London time for most pairs, except I think for the Kiwi, which closes earlier on account of the fact that they are in a very different time zone to the rest of the world. So what does this mean? Well, what it means is that you have an overnight rate, which is valid up until New York close for US dollar and the euro, and then boom, the central banks reset that overnight rate, and that kind of changes, and it also changes the relative weight of the relative price of the euro dollar. In other words, there's a discontinuity in the market price on account of the fact that a key component to it is unknown, boom, changes, and then reapplies. And that automatically, of course, drives the price of the currencies. From the point of view, oops, so I've got a couple of slides which have gone lost. So LPs, what do LPs do in this case? Cover the cover the risk. So if you've got a risk which you can't risk and you can't hedge, then what do? You just don't take it. So you have a risk here that there's no way you can possibly hedge in the market for those 5 minutes until the new rate for both currencies is known. You can't really know what the price is going to be. For that reason, you're not in a position to bet to set a price and offer the price as a liquidity provider. And what you do in that situation is basically just cover your odds and say, well, depending what's the worst thing that could happen to me today, if the rates moved by a lot, well then accordingly you set an ask and a bid on your when you compete for counterparties that is so wide that you can't possibly be caught off guard. And this is the reason why the quote widens so much in that period. That's really it. There's very little to be gained, there's too much to be lost, and more importantly, there's just no way to hedge that risk. So you can hedge the market risk by basically taking another counterparty who's willing to take it, but because this is completely unknown, there's just no way that anybody will take the interest rate risk for those 5 minutes, and as a result of that, the liquidity providers really reach an agreement, which is a sort of a ceasefire in their competitive war to be the more competitive liquidity providers. And for 5 minutes, they just price very, very widely. And that's essentially the reason why there's no interbank market for those 5 minutes, and the reason why, for instance, at DarwinX, the spreads widen so dramatically. That's really all there is to it. So with that in mind, any questions for that? I'm just apologies for this. I've had an issue with my PowerPoint, which I need to upgrade. The longer the settlement period. So, for instance, there's Japanese week. There's Japanese Emperor's Week, which I think is, and I've only learned about this today, on the 29th of April, which I believe is the birthday of the current emperor. And basically the rate is set for 5 days instead of just 1 day, because there's the 5 days where there's no changes in the rate, which makes the risk of pricing at those points 5 times the normal risk, which means essentially that the gaps are even wider at those points in any pairs involving that. Oh, there's a question that I was hoping to announce, but Hans is asking when the server time is changing. And so first of all, I have to apologize for having announced this. I don't even know how long ago, and not having delivered on this. That's the bad news. The good news is we have finally managed to get our act together, and we will start bombarding everybody with announcements that the server time is changing as of, I think it's the second week of June. So in the second week of June, we will get rid of the 6 candles that we currently have in our MT4 server, and we will finally get our bloody act together and move it to a New York close. So that's one point. And then the other one is that Lars is anticipating my other point, and that is, do you plan to disable trading altogether around rollover to avoid stop losses getting hit due to extreme spread spikes? And the answer is we are increasingly inclined to do so. And that was my question for today. So if given the choice, given you guys are happy with us for the longest and are one of the most expert traders with DarwinX, what would you rather have us do? Shut down the market altogether so that those silly stop losses don't get triggered, or still offer this liquidity for those 5 minutes? So personally, I am sick and tired and very sorry for Ignacio and Bianca and the support team. They're getting all sorts of abuse by people who don't know how the market works and who think that we're just a bunch of people who create trouble for problems. So we'll very likely shut it down, and I'm happy to see that you guys concur. So I'll pass on the feedback. We were debating about this, but we're increasingly inclined to basically shut it down, altogether, because I've had quite enough. Victor makes another point that would be the other option, and that is for users to decide for themselves. I think that would be possible. Essentially, what that would entail would be for us to create two separate MT4 groups that would either have the option of trading or not trading in those 5 minutes. That's the other option we could have. That begs the problem of, I mean, I could see that. So, I mean, I think by default, we should essentially, as you can tell, I'm making this as we go, but I think we'll probably by default shut it down and not allow trading unless somebody explicitly asks for it, in which case we could enable that. So Vlad is asking, are there other brokers who close the market during those 5 minutes? Well, what I can state is the fact that the interbank spot foreign exchange market shuts down for those 5 minutes. So there's no real market about, and of course, the guys are still streaming on emergency mode with very, very wide gaps, just in case somebody wants to really trade at that point. Why wouldn't they? Because of course that basically means in 9 out of 10 cases it means guaranteed profit, because the pricing so far outside of like the gap is so enormous that it's bound to narrow to their profit one way or the other when the market resumes. So I could see why the guys still price, but essentially there's no market at those points. So I know, of course, that there are other so-called brokers who aren't really brokers, who basically offer things like swap-free trading, basically ignoring the laws of price setting in interest rates and not applying or paying swaps. Why do they do that? Well, because essentially they're running a casino, and what the spot foreign exchange rate does is neither here nor there for the prices that they set. So it is possible to kind of make up a market and have people gamble on it, but that's not the real market. So I mean, I guess the prime brokers close, and all you can do is basically go for a liquidity provider, a market maker, really, a retail market maker, who knows that some people just prefer to trade when there's no market, which doesn't make any sense whatsoever. But what can you do? So they just try to make money off of those kind of guys, who tend to be the kind of guys who lose anyways. So yes, there are some so-called brokers which aren't really brokers, and by definition they can't be brokers, because if you're a broker, you have to source the liquidity from the interbank market, and by definition you're not if you're making up a price when there is no market. But there are some brokers who do that. Well, some dealers who do that, but that's not something we do, because we cannot take risk on our own books by regulation. So okay, well, I mean, that was it. I mean, this is the kind of webinar that we'll try to show to people who ask this for the first time. I hope it was interesting, and also thank you so much for the feedback, because I got the feeling that we're all pretty agreed that at the very least there should be the option of having the market shut. And like following on Victor's idea, I'll just try to explore the implications of perhaps allowing to opt in for trading in those 5 minutes. So there's a question here by Victor to do with the candles, anomalies in candles in chart in the history. We're talking about 2011. Right, okay. I'd have to look into this, Victor. For the time being, the prices you've seen are from any time after, I think we went live in May of 2014. So whatever candles you see on our MT4 server would have been from live prices from there on. From before that, we may have imported the data from our liquidity providers, and I would have to know what happened in 2011. I would also have to look at this candle that you mentioned from the 14th of April to see what happened then. But essentially, I don't know at this point. We would have to look into it. And that actually brings me to another point. So assuming, as we will, switch the time frames to New York close, that basically means from the moment we switch, all our candles will be in light with New York close and five weekly, 5 daily candles. But the question is, what do we do with the historical data on the server? So would you like us to replace the server and migrate exposed the data to New York close, or should we leave it as it is? Would either option cause too much of a problem? Because that's really the one thing that has been holding us back from making the move. So you'd like us to replace. The problem is that I think replacing, we would have to probably replace by the historical quotes by a broker who had always been on that time frame. So if so, would you be okay with that? And if we were to pick it from one broker, which we can, because it's a question of hooking our MT4 to another broker's time history and importing that, which broker would be your preferred broker for us to import from? Okay, Pepperstone. Yeah, that's what I thought. So, or Trader. Okay, so overwhelmingly, the people that most customers say, they try to get something out of us, so they say, yeah, you guys are great, but Pepperstone's better or whatever. But they basically, Pepperstone are the guys that everybody keeps nagging us with. So I guess they are the better option to go with. Trader was high on my list for that up until this week, where they offered to be a liquidity provider for us and kick back any losses by our customers. So apparently they have some interesting arrangements there that I don't want to be part of. Okay, so we've got Global Prime and so on. So I mean, guys, if you, Lars, there's some guys here who are pretty knowledgeable on the quality of feeds. So I will basically, I appreciate your opinion is going to be much more informed than mine. So if you let me know an MT4 broker that offers candles in the on New York close, then we'll just import from those guys. That's I guess the idea. So, Victor, any news on the USA? And the answer is yes. So we have started the application to become an NFA regulated introducing broker. This is something that we had wanted to start for quite some time, but we hadn't been able to, but now we have. So I guess the countdown is now for 4 to 5 months until we submit the application and it's approved. And the question would be which broker we should partner with, and let me explain. So by regulation, we will not be able to be our own broker in the US, so we will have to act as an introducing broker to another US broker. And what will happen is we'll reach an agreement with them whereby they report to us your trades, so that at the very least, even if you're not trading with us, you can become a listed Darwin provider, so that investors outside of the US can enjoy your intellectual property, and we will pay you the success fee, just the way we do with anyone else in outside of the US with a Darwin X broker. And the question is, which broker should we pick? And I know there's the long-standing story of, I mean, the two candidates are Interactive Brokers and FXCM. So Interactive Brokers is my personally preferred option in the sense that, they're going to be around tomorrow, and they will not have done anything dodge. However, the spreads are quite a bit less competitive than, say, FXCM. And also, they are on a different trading platform, which may involve that we have to integrate with their TWS thing, which may or may not well support the feeding of trade. So interactive brokers, all other things ignored, would be probably the better choice. But in the short run, it's actually far from ideal in the sense that we have to integrate with a third-party platform. So if it wasn't down to interactive brokers, which broker would you guys like? I mean, at this point, I basically have to, cover my nose, not think too much of what's going on, and probably go with FXCM unless you tell me there's a better option in the US. And it's a limited choice because I think there's only 12 brokers that can be broker dealers for a spot foreign exchange in the US. Yeah, so Vlad is making a very valid point. There's not many left. Yes, I think there's 12, and they're not looking in great shape either. But I think that offers another opportunity because there must be a huge, amazingly talented talent pool of US traders that were kind of leaving in the dark when it comes to listing Darwins. So that's the reason we want to do it. The question of how hard it is to bridge interactive brokers into Prime XM, you're talking about let me put it this way. If it was down to us, probably not hard at all, but we cannot rely on either of them of doing what's required to get things to work flawlessly. So the issue is not so much that it's hard to do, but that it's not us who do it, it's them. And that's what makes it troublesome. But I guess, yeah, maybe there's an option there. I'll look it up. Anyways, again, thank you so much. Don't want to take up too much of your time. It was very useful feedback as ever, so thank you for that. We will probably the decision will be made that we shut down trading unless people specifically request it, and we put them on a separate MT4 group where they're kind of left to their own devices, but we'll take no responsibility for what happens in those minutes because the spreads, the market really widens at those times. And beyond that, I have a bit of news. We're ditching the infamous homepage we currently have as of next week. And there's a couple of surprises in the functionality there that I hope you will like. So it's another another small step forward, which I hope will satisfy everybody, especially when trying to explain what it is we do. So look forward to your feedback when we launch that next week. And yeah, any other points, do let me know. So unless there's any questions or comments, thank you so much, everyone. As ever, I'm very interested in hearing your opinion on the interactive brokers versus FXCM thing. I have heard loud and clear very valid points on, interactive broker solvency and so on, but I'd like to get your take on, the sort of difference in the price feed. FXCM is more competitive than interactive brokers, and also preferences in terms of platform. So without further ado, thank you so much. Take care. Best wishes, everybody, and I look forward to our upcoming webinars. It's always great to interact with you guys. Take care. Bye.